Transaction monitoring is a core control mechanism designed to protect banks from being misused for financial crime. Regulators across the world require banks to establish robust monitoring systems to detect suspicious transactions linked to money laundering, terrorist financing, and organized fraud. The regulatory intent is not merely to identify unusual transactions, but to create a preventive shield that protects the financial system from abuse. Laws governing anti-money laundering compliance require banks to continuously review customer transactions, compare them against expected behavior, and escalate anomalies. When suspicious activity is detected, banks are obligated to file suspicious activity reports or suspicious transaction reports with the relevant financial intelligence authority. For example, in 2022, several global banks faced significant penalties because monitoring systems failed to detect lead cross-border transfers used to disguise illicit funds. Effective transaction monitoring ensures transparency, accountability, and regulatory confidence in banking operations. Beyond regulatory compliance, transaction monitoring plays a strategic role in fraud prevention. Modern monitoring systems operate on a risk-based philosophy, meaning customers and transactions are assessed according to their inherent risk levels. High-risk customers, such as politically exposed persons or businesses operating in cash-intensive sectors, are subject to enhanced scrutiny. The system generates alerts when transaction patterns deviate from established customer profiles. For instance, if a retail customer with a modest salary suddenly initiates multiple high-value international transfers, the system flags this as unusual behavior. A real case involved a regional bank identifying mule accounts used in digital payment fraud by analyzing rapid inflow and outflow patterns within minutes. By detecting these anomalies early, the bank prevented significant financial losses. Therefore, transaction monitoring is not just about reporting suspicious activity, but about proactively identifying fraud risks before they escalate into systemic threats.